As we head into 2026, there is no shortage of headlines telling people to either be all in or completely fearful. And recently, I spent some time reviewing First Trust 2026 economic outlook. And what stood out wasn't fear or hype, it was perspective. Today, Ben and I are going to break down what this forecast really means, where the risks are at, and how thoughtful planning matters more than predictions. Stay tuned, you're not going to want to miss this.
Glad to have you on another edition of Legacy Beyond Wealth. I am Ben George with Rob Shelton, as always, at Axio Wealth Management. Find them online, axiowm.com. So today we're talking about the economy, especially as we're early here in 2026. We're not going to do so in a sensational headline-driven way, which, gets a lot of views on YouTube. But we're going to use First Trust 2026 Outlook as a framework for this discussion, because it does strike a balance that we don't often hear, right? Good things are happening. We don't hear that all the time, but the risks are still matter. They're still out there and still evident. So give us a little background on First Trust, Rob, as we kind of sets this up and talk about kind of what they're discussing here going into 2026.
Yeah, one of the reasons, there's different sources I look to try to gain a perspective on what's ahead in the economy. And First Trust is one of those top three that I have out there. And the real reason is because I feel like there's no real ulterior motive that's out there, and that they can talk exactly how they feel. And I like that openness that's out there. And as you look at this report, it's titled Still Weary. But I would add, but not pessimistic. Because they openly admit that last year they were too negative going into the year. We saw that growth upheld much better than what was expected and that markets finished strong. But they're also clear in the report that doesn't mean risk has totally disappeared. And whereas we're going into 2026 with meaningful positive things like innovation, AI, deregulation, tax stability, and likely rate cuts, but there's also some structural changes and challenges that are out there. And so I like that with First Trust, I get maybe that little bit more of a conservative approach that's out there. And so there's really three key things to take away from that report that are out there.
Yeah, let's dive into those too. And I like that they are, kind of transparent. I like that there is some positive and negatives, right? Because too often we're one extreme or the other when you're producing this content for people to take in online. So what was the first kind of key theme that you liked?
Yeah, growth is slowing, but not collapsing. I mean, okay. One of the biggest things is that growth is expected to slow, but not fall apart. You look at real GDP growth is going to be about 2%, inflation right around 2%. And that's slower than recent years, but it's still healthy. And why that should matter is because investors should be able to expect a little bit slower growth in different environments by being rewarded by being disciplined. No longer is about riding the stimulus momentum. It's more about fundamentals that are out there with investments. And so returns may be more muted into the future, but we've got to make sure that we're staying disciplined in our approach.
Yeah, I think it's important to kind of point out, the economy isn't breaking. I think that's kind of what people will talk about. It's more normalizing, right?
It is. And, there's no shortage of headlines, especially with the administration that we have out there. I think it's given us probably more headlines in the last year than some administrations have given us over an 8-year period of time. And some of those headlines can be pretty sensational and can strike fear that is in there. And if anything we could learn from 2025 is that if you took all those headlines, I would have been pretty pessimistic as well, but we still had good, strong growth. And so I think we got to look more towards the fundamentals versus sensational headlines going forward.
Yeah, a good first takeaway. I know there's another strong message in this too, is all about valuation, right?
Yeah, you'll talk about it and you'll hear that markets are overvalued. And that is true. I mean, there's ways that we measure things. use, right? Like to measure the oil in a car, we use a dipstick that's there. I was trying to teach my daughter this. She's just turned 16 the other day about vehicles and maintenance and checking the oil level and what a dipstick is. And when you look at this, you call it the S&P 500. It's just a measurement of the stock market of the 500 largest companies in the U.S. market. Not all of them are overvalued, but when you look at the measurement overall, it is overvalued. So security selection is going to be really important going forward. Not every stock is overpriced, but by blindly investing in just the S&P 500, that might be taking on a little more risk than what it has in the past. And so we want to make sure that you're taking a much more strategic approach into investments going into this year, where diversification, selectivity, and risk management become critical. We want to make sure people remember that we're investing in a market of stocks and not just a stock market.
Are you ready to unlock the freedom to live your best life? Schedule your no-cost 60-minute discovery meeting with our team today. During this session, we'll take the time to understand your family's story and financial dreams. Together, we'll craft a personalized roadmap designed to help you achieve your goals. Let's explore how we can unlock the freedom for you and your family to thrive. Just click the link in the description of today's show to get started.
Yeah, that's a good point. You want to be selective here, not passive. So again, if you want to take that proactive approach to your investment strategy this year, want to have a review, want to have someone look over kind of where you're positioned and see what can be changed, what can be adjusted. Again, go to AxioWM.com, get in touch, set up that discovery call with Rob and the team to begin talking about that. One thing I did appreciate in this was their humility, as you've kind of pointed out. They say openly that no one knows exactly what will happen, right? I mean, it's refreshing to have someone talk that honestly.
Absolutely. And in fact, it's nice to hear that, especially as their top economist, Brian Westbury. He was rewarded, got an award for being the most accurate forecaster. And so even though they didn't get it right last year, being able to have that humility, even after getting that reward is pretty impressive. And I think it's important to note that there is a lot of things that are unexpected. I mean, we started off this new year with a lot of excitement down in Venezuela and a lot of geopolitical events that are taking place. A lot of issues domestically here at home as well, between elections and central bank leadership changes that will all be coming into focus coming up this year. And things and outcomes can shift pretty quickly. But instead of pretending to predict the future, the message is to stay nimble. You want to build portfolios that can be able to adapt. Plan for that volatility versus being surprised by it. And I think that philosophy aligns very well with how we do planning for a lot of different people that is out there. It's about planning for multiple outcomes and not just the best one.
Yeah, somebody watching this video, Rob, might be saying, okay, this is great. There's some good information here. But what can I do with it?
Yeah, I think don't confuse caution with fear. I think so often I'll meet people and they'll read some kind of a report and they'll just immediately let fear take over and say, I got to get out of the market altogether. I think you have to take a look at it and say, okay, how do we plan to have that portfolio, like we just talked about, be nimble, that it can be able to adapt and to change? Just met with a client this morning and reviewing their account. The wife wanted to be more aggressive. The husband wanted to be more conservative based on different headlines. And as we went over their portfolio again and reminded them of the different buckets we have and how they're invested, boy, that fear started to dissipate a little bit. And that leads to the second point that we'd love people to be able to take away from this, is to avoid concentration risk. There's been a lot of big returns that have been out there. I was talking with a CPA the other day. She had a client that put a whole bunch of money years ago into NVIDIA, and now it's up huge. And we were trying to strategize about how do we not be so concentrated in one stock like NVIDIA, or maybe it's Apple or Microsoft or some of these other companies that saw big returns. How do we try to take some of that off and get more to a diversified approach and minimize the taxes that go along with that? And then third is to understand that when things happen, even in volatile markets, and things can change, but only if you're paying attention. 2026 may feel like a roller coaster at times, But that's where preparation comes into play. Diversification and discipline matter much, much more than just predictions. So one of the questions I love to ask clients, or people that are looking to become clients, is I love to ask them, what is your investment plan? And I would say probably 85 to 90% of the time, most people go, I don't know. I don't really have a plan. And if that's you in your situation, that's where you really have to have a plan in place that is nimble, that allows you to be able to adjust. If that's something you're looking for, we'd love to have you jump in for a discovery meeting with our team.
Yeah, it's okay not to have an investment plan and admit that, right? I mean, not everybody does. Not everybody's thought about it. Not everybody's been strategic about it. But again, this is where a team like Axio Wealth Management can help you. And 2026 is as good a time as ever to begin taking those positive steps forward in your financial life, preparing for your next phase of life, but also that legacy that you want to carry with you along the way. So if you want to get in touch, again, everything's in the show description. AxioWM.com is the website. You'll find more there, as well as the opportunity to schedule that discovery call with Rob and the team. That's a good place to end there, Rob. Kind of thoughtful optimism, grounded in reality. So we appreciate you taking us through that today.
Thanks, Ben.